Hey everyone, welcome to the live show. If you hear any noise today like that, drilling, I don't know if you can hear it. Unfortunately, I've got a water leak in the house again, and I've got the plumber's Mike, the plumber here, busy digging the thing out. So just bear with me on that. There'll be some hammering and there'll be a bit of drilling in the background by the sounds of things. Can you believe it? In the last couple of years, it's about my sixth water leak. I've had the bathrooms replumbed. I've had everything just about replumbed. I don't think there's any old pipes left, to be honest with you. And this one has now appeared under the kitchen for the second time in that area under the cement. So they're busy digging down there to get that sorted out. So unfortunately, we've got to deal with that today. And then last week was the old eye thing. As you know, I was in for the eyes. And yeah, that's been sort of, they dug around in there and said, okay, they've got to now operate on the 26th. So that's not happening yet. But yeah, that was still quite annoying, quite a biggie. So it's been an interesting week. Let's go and have a look at our trades, guy. Let's go and see what we're up to. Don't forget the risks associated with the market. Most traders lose money. And if you're unsure and you don't like risk, you don't like losing money, you probably shouldn't be trading. But that said, let's get on with the video. Let's get on with the live show. And let's get on with trading. You're not interested in all my personal things. But please excuse the noise if there is any news today. Sorry, I did have another trade in here, which I stopped out on. History. Great British pound, Japanese yen, guys. Took it long, went against us. It just didn't look right, so I dumped that one. Brent has turned against us. I went long on, short on Brent, and it was looking great, looking good, doing the right thing. And then it's bounced up here, and now it's done this nasty little move through the trend resistance, which is concerning me a bit, but I'm not that concerned because we have a major resistance level at the top here, which hopefully it'll bounce out of and come back flying down to the bottom again, and that will rectify that trade. So we'll stay in that. The stop loss is at 78.50. We'll stay in that one. We won't bounce out of that one too early. New Zealand dollar, US dollar, we've been in for quite a while now. We took that trade quite a while ago. We're still in it, but it's also in the red. And the US dollar, Japanese yen, I took a buy on that. US dollar, Japanese yen, because it broke through this little resistance here. And I was waiting to see if it would go up, because the risk to reward, the reward is quite good against the amount of risk we're going to take. And the market is a 50-50 game. So we've got that trade. And if you've got any other trades you're interested in, let's have a look at them today. And I've done a video on understanding gap fills and FVG and fair value gaps, that is, for you guys, which will come out probably tomorrow, as a result of a lot of people asking about gaps and whatnot. Now, I don't trade with FVG. I think it's an ICT concept or whatever the case, but I've shown you how they work and how to do them and all the rest of it. So guys, do let me know if you can hear the noise in the background, if it's bothering you or anything like that. I'll see what I can do about it, but they have to drill, they have to chisel the cement out to find the leak in the pipe. We had the gas guys here this morning. They put gas in your pipes and they send it through the system, and then they go around looking for the gas. And they were looking around outside, and the wife came running out and said, I can hear it in the kitchen. Go, there we go. In a cupboard, take all the stuff out, and there it is under the cement. I've been looking for it for a couple of days. And these gas guys that come and do all these leak detection guys come out and they find the leak, because normally I find the leak myself. Normally I go around listening to all the pipes, and this time I just couldn't find it with a stethoscope. So they had to come out and do their leak detection test. I'm glad you don't hear anything other than me. That's fantastic. And hopefully not hearing anything other than me isn't the problem. But linking, great to see you guys. Luigi, good morning. And good morning to everyone. And thanks for pitching up, and thanks for being here. It's great to have you guys on board. I think one day we should have a target or a goal to have 100 concurrent viewers at one time on this channel. For some or other odd reason, people don't want to hear about the hardships of trading. They want to hear about the good side of trading. And I get that. Psychologically, everyone wants to hear that they're going to win. It's the same as when I tell you that 70% of traders lose money. Absolutely everyone, including myself, believes that they're going to find themselves on the side of the 30%. And even if I tell you that you're going to lose, 99% of traders lose on the 5 minutes, oddly enough, absolutely everyone will believe they'll be part of that 1% that's going to win. They'll never be part of the 99% that's going to lose. That's where half the problem comes from. Guys, I did a survey the other day for you guys and asked, what hampers you the most in trading? What makes you think that you're failing trading the most? And oddly enough, nearly 50% of that came out as strategy, that don't have a decent strategy. So strategy is one of the most important things. But you'll notice I asked the question about FOMO and about fear as well. And a lot of people were on that sort of area. But at the end of the day, if you don't have a strategy, FOMO and fear is going to play into it big time. So that's why I put those two in there as well. So the other one was technical ability, but very few people feel that they have a bad technical ability. And that's because you go on a course and they teach you on the squiggly lines, the high probability trade, and they teach you technical ability. They even teach you abbreviations like FVG, for example, fair value gap. And you come back and you think you know everything about the market because you know abbreviations, you know a little bit of technical ability. But the reason I put technical ability in there as well is because I know that technical ability is not going to make you money in the markets. What's going to make you money in the markets is obviously the strategy and obviously the fear and the FOMO. Now, most of you answered that question as strategy, which really does play into the fear and the FOMO, which is great, which means you guys really do understand precisely where the problem lies. The problem lies in having a good strategy. So in other words, for example, you take a trade like this Brent trade and it goes against you. This trade's going against us, but it's still in play. So it's a swing trade. So what do? We sit on our hands and we wait for it to play out. The trade that I took that went against us, that had invalidated. So as far as I was concerned, it was 50% down, as with the Brent. And I looked at that and said, you know what, it's halfway to stop loss. And it looks bad. It just doesn't look like this trade's going to go the way I wanted it to. It's starting to look bad. Dump it. Let it go at the smallest loss you possibly can. The same way you would normally take your profits, which you're not supposed to do. Now with the Brent being also halfway down towards its stop loss, but I'm looking at it and saying it's still in play. So I'm going to sit on my hands and wait for this because it hasn't invalidated yet. It'll invalidate if it gets up there to the stop loss. So that one will only invalidate if it gets up to the stop loss. Let's have a look here, and you'll see it was the Great British Pound Japanese Yen. So I just want to have a look at that trade while we stand here, and you'll see that I had a buy on this because it broke through this very short-term trend resistance, right? So I look at that as that's a signal to buy. It's broken through that, and it should continue onto the upside, but it's gone against us. And my stop loss was further down below the lows here, which is fair, but this is halfway towards my stop loss. I'm looking at this and saying, there just isn't anything in this. There just isn't anything in this that says to me, keep on buying. It's done. There is a support here, but it's done. So that's why I dumped that trade early. And when it's in a loss and you can dump it early, do so. I mean, get rid of it while it's still a small loss and not a big loss. US dollar, Japanese yen, as I say, it broke through that trend resistance as well. So I'm looking at the possibility of maybe a bit of upside, which hasn't happened yet. Not comfortable with it. New Zealand dollar, US dollar is worrying me a bit. Well, I have gone long on this trade, and it was looking good. It's starting to look a little bit iffy. It's just hanging about here, and it seems to want to trade between this 56.20 and 56.80 level and not really do much. It might be stuck in that range for a while, but as a swing trader, you've got to learn to roll with the punches and just let it ride and see how it goes. If you guys have got any questions, put them down there. If you've got any trading ideas, put them down there. Let me know. Let me know in the discussion. Volatility spikes have at least calmed down. We don't have that. Our trades getting taken out by nasty little spikes. Let's have some coffee. So at least the nasty little spikes on wiping these trades out big time at the end of the day. But I did put it, like I said, I put a video out about these gaps because people are confusing these gaps with fair value gaps, and it's two totally different things. This type of gap is a gap where it closes last night, opens tomorrow morning, and there's a gap, or Friday and Monday morning, and there's a big gap. And the story in the market is a gap will always fill. And a lot of people will call that rubbish and say that's not true and argue it and whatnot. That's because they don't understand it. The understanding behind a gap like this is It will fill, but don't expect it to fill immediately. Now, in this case, it did fill immediately, which is great. Many of them do fill immediately. But a gap will always fill, but it doesn't have to fill in a day. It doesn't have to fill in 5 minutes. It doesn't have to fill in a week. It could actually take a year or more to fill. It could fill indefinitely 30 years' time. A gap will fill. And that's why we don't trade them, because there's no time as to when it will fill. There's just a saying in the market that the gap will fill. So it will eventually fill. Hi, Shane. Welcome. So the gap will fill, it'll always fill, and that's how it is. But then we have what's called the fair value gap. So let's see if we can find any on any of these charts, just out of interest. There must be one somewhere that we can look at and try and give you a... I don't trade with them, so spotting them, but I want to spot one that's close by, that can work maybe, or can be used. Let's just see. There's a fair value gap right there. Okay. So I'm just going to make this bigger so you can see it. And a fair value gap is basically what they call an imbalance. In other words, an imbalance in this candle closed at this area here. This third candle opened at this area here, leaving an imbalance between the two here. So effectively, the belief is that there'll be money or orders lying in that particular area. This is a bearish gap. So a bearish gap being that the price will come back up, take money there, and then continue on down. That's the idea behind a fair value gap. Like I say, it's not a concept that I use. It's not something that I need to use. But I just thought I'd explain it to you guys anyway, and I have made a whole video about this because many people want to know. I just want you to know the difference between a normal gap and what people are, because this fair value gap thing has become sort of a popular trend, I suppose. People are interested in it. People are using it to trade with, and people are effectively calling it something that you can trade with, which I don't disagree with. I'm sure you can use any system to have a high probability trade as long as you've got some kind of strategy behind it. I mean, you don't even need a strategy to actually trade, a system to trade, as long as you've got a strategy. So, if you pick a direction, it either goes for you or it goes against you. And everybody's got their method of picking out their trades. And if you want it to be using fair value gaps, then so be it. That's just a way of picking your trade out, or picking which way the market's going to move. So I just thought I'd show you what that is and how that is for those of you who don't know. Many of you probably do know. Most of you probably already do know, because it's so popular in the markets at the moment that I just thought I'd bring it up. But besides that, that's not something I tend to get involved in. I don't like to use too many systems. I like to use my price action, support and resistance, and obviously the trend. We trade three ways, as you know, guys. We trade in a range, which is just basically flat trading. We trade with the trend, when trend is your friend, and we counter trade. All three. And whichever one works the best for us, works the best for us. Now, for example, trading with the trend failed on the Brent. It went against us. We traded with the trend here, and it was all going well, and then it turned against us. So, sometimes it breaks. Now it's a counter trade, and I'm just waiting to see what happens at that resistance. Or you get, for example, this US dollar Japanese yen. We've now traded a counter trade based on the fact that it seems to have broken this temporary short-term structure here, and I was hoping that it would get up to the main structure. Nothing's happening at the moment, so we have to see how that's going to go. But that's the three ways we trade, guys. There's no two ways about it. That's how we trade, and that's what we look for in the markets. Trade of the day, we have gone through trade of the day. Let me go. I'm thinking of doing a trade of the week as well, because on a Sunday or whatnot, I'll sit and I'll have a look at the trades for the week on the weekly chart. So if you guys are interested in that, let me know. I'll have a look at that as well. Lincoln, I did the same thing as you. I held 2 trades over the weekend. They're your trades, by the way, guys, because you guys chose the trade. I think you chose both trades anyway. And it was the Brent and the New Zealand dollar, US dollar. I held both these trades over the weekend. You guys chose these trades, and I didn't want to sell them because I just felt like I was doing you guys in if I sold them on Friday. So I left them in, besides the fact that I'd come back from the hospital on Thursday and I wasn't too into it. So I left it on over the weekend. It's not something I would normally do, particularly on Brent crude oil, but I did do it. But if you want to take the chance, you can. Just understand what you're doing. Just understand that when you do it, there's a possibility things can go pear-shaped. What I normally do is I look at the weekend and I say, what could go pear-shaped in the world this weekend if I'm on this side of this trade? And that will give me my answer as to whether I want to do it or not. 9 times out of 10, it'll start happening on a Friday. You'll see it coming and you can get out. It's very seldom that it happens on a Sunday afternoon and you wake up on Monday morning in deep trouble. But you can normally see it coming on the Friday afternoon. On the market, opened both trades, opened on my take profit. I was the only one in the world to hold over tariff scare weekend. Yeah, I was not worried about the tariffs at all. To be honest with you, that didn't bother me at all. The tariffs did not disturb me. As far as I was concerned, that's not a big enough hit to destroy the markets. It can move things around and spike things around, but pretty much didn't worry me at all. Aussie dollar, New Zealand dollar looks interesting. We shall take a look at that. Hi, Matthew. Welcome. Hi, Wendy. Good to have you back for another live. It's good to have you guys here. Okay, so did you say Aussie dollar, New Zealand dollar? Surely I've got it on the watch list. Do I have it here, or are we not trading this one? Okay, let's just go and have a wee look. AUD, NZD. It's not on the favorites. Look at that, man. Let's put it on the favorite. Let's put it in Rob Watch. Okay, there we go. And let's just go and have a look at it while we're here. Watch lists. Let's just close that off. And there we go. Now it's on there. Okay, Aussie dollar, New Zealand dollar. Looks interesting. Okay, shall we analyze Aussie dollar, New Zealand dollar? Let's see what we've got here. Take it up to the day. I will try and take it up to the day. There we go. It's on the day. And let's put a line chart on here. And let's just have a look at this guy. Let's see what we've got here. Dum, 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 dum. That's good singing, that. Spot on resistance there. That looks pretty strong. And obviously we've got a bit of a move at the bottom here. Let's have a look at that. Okay. That's on your daily. It's in a range. That's great. It's trading in a range. What was it before it got to the range? Before it got to the range, it was bullish. Okay. Bullish before it got to the range. Let's have a look at the 4-hour. See what we've got there. And it looks like a bit of a short trade. So are we going to get a counter trade on this? I'll tell you what we're going to do for this. We're going to look for the counter trade. Because clearly we need a counter trade here. Counter trade. So what I'm going to do here, I'm going to be a little bit cautious because it is quite bullish up to there. But I think we've got a nice bearish trade here coming up. And I'm just wondering if we should just grab the counter trade here, but I see a few of these have actually dropped through this level. And just see. I could get a nice short trade on this. It doesn't look too bad. Okay. You see, it's either going to break through there or it's going to come down, but there's a red candle that's closed and come down. So coming out of the resistance, there is a strong chance that it could come down. Perhaps we should just wait for it to come down a little bit further, perhaps below that low, and just see if we get a nice short trade out of this guy. That might be a good idea. So this is the Aussie dollar, New Zealand dollar. Might be an interesting trade. Should maybe look at a short on that. Okay. You guys want to take the short on that, just remind me a bit later. We'll have a look at it and see where we are. See if you guys want to take it. Might be a good one. Righto. So now we've spoken about understanding the gap fills and the FVGs, so fair value gaps, so we know what that is. You know, assumption is one of the biggest problems in the market as well. People tend to assume things, so you assume things are going a certain way, and then you kind of take that trade, and assumption is the mother of all evil as well. But one of your biggest problems is FOMO, fear of missing out. You know, if you're not prepared to wait, if you're not prepared to be a little bit patient, FOMO can whack you, can hurt you. You know, FOMO is one of your besides fear, FOMO is one of your biggest enemies. It can actually destroy you if you're not careful. So scalping doesn't always win. You know, that's also another thing that I wanted to bring up. So many scalpers out there showing you win, 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 win. I'll tell you something, there must be some losses in between there somewhere. There's no way. Because as you can see, we've got these trades opened here. Every single one of these trades opened. Okay, maybe one of the two of them did go green before they went red, but most of them are in the red. Okay, and if I was a scalper, I'd be in the red. So how can I win every single trade? Is my system that good that I would win every single trade? No, there is no system like that. So unless, and if you guys have a system like that, let me know. Let me know. A system is only a high probability trade. It's, for example, this trade here. If we take this short at the moment, it's going to go against us. It's going to put us in the red because it's going to go up a little bit. But it does look like a reasonably good short. Even if it comes through and breaks through this trend support and we go short, there's a good chance that it's going to go against us before it goes for us. Every trade does that, and that's something that always interested me about scalpers. They take trades and they go straight into the positive, and I'm like, how does that happen? Because I grew up with just about every single trade that I've ever taken has always kind of 80% of the time kind of goes against you before it goes for you, because you're looking for that trade when it's in that position. So yeah, I don't know. Yeah, gold is making new highs, Wendy. Definitely. I've had a look at gold. I haven't looked at it today. Sorry, I haven't gone over it with you guys. But yes, gold would be a fantastic little purchase. I think this is a little bit close, so I would maybe wait for this area over here, which is, I mean, let me draw over it so you guys can see it, but I'd sort of wait for this area down here, which is kind of at the 2860, 2880 area. That would be a nice buy. You could buy it here, I suppose, at the 29. You know, that is an area, but I'm just looking at this as a much nicer area to buy from. Also, I guess what we've got to watch out for, we do have this long-term trend, which is pretty safe, but on the short term, we might have this. So let's keep an eye out for this. If it breaks through that, then we could have a problem with that as well. So just keep an eye out for that break there. Let's not get too excited yet. But yeah, I like the long. I like the long trade on this. You know, at this level, you could possibly still get a nice trade out of her. See here. You see she's right in there. You could get a nice long trade out of her as well. So she's in structure and she's going well. Well, I can help with that. I scalp, and that's just for fun. I don't make anything. I'm lucky to break even, and only so on Forex and commodities. I do it for fun. My profits came from swing trading. Yeah, Lincoln, I think that's the big thing. I tried scalping years ago, many years ago, because I also thought that there was a path to millions scalping. I thought, wow, you know, this looks good. This looks like something you can do. But what I found with scalping, and this is my personal experience with scalping, not what everybody else says or not what everybody else is doing or whatever the case, but my personal experience was you work really hard. You do 8 trades in a row and you profit on them, and you've worked your butt off and you've made a profit on all those trades, and you're really proud of yourself. And the 9th trade comes along and it just wipes out all the profits from those 8 trades that you just did. it's soul destroying. It's absolutely soul destroying. That was my personal experience with scalping all the time. And it happened over and over and over. And then I realized what it was. It was, there's no strategy in scalping. It's just scalping. So it's fun. I agree with you. It's fun. But it's also soul destroying because you work so hard to make all those little profits. And then one nasty trade comes along and says, how's your mother? Thanks very much. We'll take all that profit back. And that is where scalping is painful. Let me tell you, it's and what the guys are showing us is that they're winning on scalping, but they're only showing you the winning trades. I don't think they're showing us the losing side of the game, and that's the bit, because you get all sucked into this and you think, oh, that looks good. I'll try that. I don't know. It must have been 10 years or 15 years ago that I tried it. And I thought, this looks like fun. Just like Lincoln said here, it looks like fun. And it was fun. I mean, you get in and you play around in the short time frames and you're playing around, a bit of fun. But then you find out that you're just working your butt off for nothing. And then you, no, thanks, but no thanks. The talk of newbie, sup, Rob. How's it, bud? Welcome to the show. So yeah, no, yeah, I totally agree with you, Lincoln. It's fun, but it's wow, you just sometimes look at it and think, why? Why did I even take these trades? It's insane. Swing trading is that much more relaxing. You take the trade, you wait for it to play out. If it doesn't play out, so be it. If it does play out, fully for you. And as I said to you guys, we might lose 10 trades and think, oh, the world's turned against us, man. It's the end of the world. But you win 2 or 3, that's all back. It works the other way around. Let's put it that way. If you're scalping, you win 8 trades, you lose 1, and it destroys you. But the way we trade with our strategy and our system, or our strategy, let's say, we lose 8 trades, we win 1 or 2, and we feel great. It's sort of the other way around, because the winning trades really make the difference. That's the difference. It works the opposite way around. So all that hard work losing the money, and then you make 1 trade and it wins it all back, and you go, now that's life. You see, that's just how it works. Swing trading works that way if you do it right. Yeah. No, look, Lincoln, exactly what I had a pretty tricky month last month, and I'm hoping that this month doesn't turn out to be a bad month as well, because I see we're in the red on this account, which means my main account's pretty much following suit. And yeah, but you get those lulls in trading, and as long as people understand that, and I know people don't want to hear this, people don't want to hear it. And I can see that by the amount of views that I get on my channel. I can see that by the amount of people that follow. They don't want to hear this. They don't want to hear that you might have a couple of bad months in a year. Or, as long, you over the period of the year, you might make a profit, but there'll be a couple of bad times that you have to ride through, and you have to ride through those times. And that's what gets difficult, and that's what people don't understand. And people don't want to hear it. They really don't want to hear it. They want to hear that you're going to win every single trade, and they're always going to be a winner, and you can't lose. And that's what people want to hear. It's unfortunate, but that's what the world is about. The world is about, we don't want to lose, we only want to win. And the guys that only show you the wins are the guys that will obviously be the more popular guys, because it's psychology. I mean, I understand it. I totally understand it. Human beings are like that. There's not much you can do about it. But the fact of the matter is, 70% of swing traders will lose, and only 30% will win at the end of the day. And day traders, well, that's scalping. Day traders, 5-minute traders, effectively that's scalping, and 99% of traders lose that. And most people, like I say, most people will believe that they'll be part of the 1%, or they would rather believe that they're part of the 1% that are going to win. And if you don't understand the strategy, then you're not going to win. The strategy is simple. Just lose less on your losses and make more on your wins. That's the strategy. It's not rocket science. It's not maths. It's not fractal, it's not bots, it's not AI, it's just human beings that are trading in the market. So many people think that the market is maths. I don't know why. It's a subjective market. But older guys like me will understand better because we didn't grow up, we didn't have computers when we grew up. So we understood that a market was a market. We understood that the market was made up of human beings that want to buy and that want to sell. So when computers came along and all the mathematical stuff came along with it, we already understood that maths is not going to make you money. What's going to make you the money is understanding the people that are buying and selling. But these days, a lot of people get into the market and all they see is the computers, all they see is the little mobile phone apps, and all they see is the charts and the figures bouncing up and down and running around. And they don't see the human beings behind it. And they start to believe that it's an objective market, when in fact it's a very subjective market. You know, if somebody stands up and says something like the Fed in America or whatever the case, or they change the interest rates or whatever the case, or a bank starts to go bankrupt, things change in the world. These are things that human beings react to, not maths, not fractals, not bots. These are things that human beings react to. People listening to that saying, I'm invested in that. I got to get out of that because I'm going to be in big trouble if I keep on staying in there. I need to get out of that as quickly as possible. And then everybody sells and the market shows a big red line. And then you go, ooh, the markets are objective. Look at that. Look at all those lines. It's human beings seeing something happen and listening to it. Somebody said it earlier when you're talking about tariff weekend. Tariff weekend. That's not objective. That's subjective. That's a bunch of people seeing this talk about tariffs, and it's affecting your psyche. It's affecting your fear. It's affecting your way of trading. Your way. You're thinking, should I? Shouldn't I? Maybe I shouldn't trade. Maybe I should hold the weekend. Maybe not. Because you see these things happening. Because somebody's saying something. Because somebody's doing something. In this case, it's Donald Trump saying something. He's loading tariffs on people. He's putting sanctions against South Africa. Yeah, that's how it goes, guys. That's how it goes. So let me know how you guys are doing with your trading. So besides the Aussie dollar, New Zealand dollar, okay, you see, like I said to you, if we're taking that trade, it would be going against us at the moment, but it'll probably go for us if we go on a sell, and it actually takes us down. And we'll probably do okay with that. I see this US dollar Japanese yen is now decided to go against us. Yeah, you know, it's not the greatest trade because that is bearish. It does look like it wants to fall over. I just saw it going through the trend resistance and I took the 50-50 thinking, well, maybe it'll go up to here. But let's see what it does. Maybe it'll stop around here and then go on to the upside. So let's not get out of that one. We'll hold on to that. Gosh, this New Zealand dollar, US dollar is just not going anywhere. It's just sitting here doing nothing. I guess we're going to have to be really, really patient with that one and just see how it goes and just see if it eventually gets us up there. I wonder if the plumbers found the leak because I see the drilling has stopped and the hammering has stopped. And it sounds like maybe the guys are leaving. I don't know. Perhaps not. I don't know. I do hope they found the leak because it's expensive to have a water leak. Eh? Yo, you wake up and there's just thousands of kiloliters disappearing. Yeah, no. Okay. But yeah, that's getting sorted out at least. That's another thing to worry about. I think it's because, you know, living in a coastal town, if you think about it, we live on beach sand, number one. And number two, all the pipes are, you know, affected by the weather. You know, so there's a lot going on there that could affect everything. That sounds like some taps being switched on and off in the area. I don't know. I don't know where that is, how that is, what that is. But yeah, they had the gas guys here earlier, so that's going to affect the noise. So I don't know, this US dollar, Japanese yen, is it going to go against you? Is it going to stay long? Oof, let's just watch it and see what it does. I think we'll just keep this going over here. Just see how we go. See if it works according to plan. Right. US dollar CHF. Okay, Gary, let's have a look at US dollar CHF. US dollar CHF. Gary, what's your thoughts on US dollar CHF? What's your initial thoughts? Tell us. Let us know. I see I've got a big resistance at the top here. I've got a big support down here at the bottom. There are some Forex pairs we never discussed. Most of them seem to have lower volume sells. I don't like to trade them because of the volume. Do you feel the same? Lincoln, I like to trade products that have volume. And let me be honest, because it's like trading penny shares. You know what? You buy this share for 1 cent and you sit and you wait 3 years, nothing happens, and then it goes to 2 cents and you're like, doubled my money. But, you know, the thing with low volume shares is they just don't give you anything. That you need this volatility, you need this movement, you need volume to make money or to lose money. But you need this volume, you need the things to buy and sell. So I prefer to trade the pairs that have got some volume in them. I totally agree with you there, Lincoln. Don't trade things with no volume. It's a bit like gold and silver. You know, there's no point in trading one or the other. I mean, both, because they both move the same way. But I prefer to trade gold because gold's got more volume, more movement. So I'd rather trade gold. It's like the indexes. I choose the indexes which move, the indexes that are doing something. I choose the Forex that's doing something. I choose the commodities that are doing something. There's no shares as well. If you wanted to trade shares, for example, I don't trade shares. I invest in them now. But if you do trade them, you know, look for shares that are moving. Look for shares with big volume. Don't look for the penny shares. You're wasting your time. You know, you can't really trade on things that don't have volume. You need volume. Oh yeah, almost forgot about the US dollar CHF. Looking at it here, thinking if it breaks trend may go to 9100. Are you looking at it breaking this trend here? And yeah, that is a good possibility. Let's just have a proper look at it. Let me just see if my old analysis still stands. And yeah, look at that. That's there, that's there, that's there. That's 3 strong touches, which most people like, for 5. Okay. It has broken through and come back on the day. All right, but that's good. Let's go back to the H4 and just see what that looks like. On the H4, that's quite a big break, and then come back, sit there. All right. And then let's just take it back to the candles. So what I would say, I agree with you, Gary. If it would break through this, then yeah, also a nice short trade. Keep an eye on that. If it breaks through this trend support now, again, but you see previously it failed, but there's a good chance it's just come back to retest. Because these things, we're drawing lines on trends because I can't really draw rectangles this way. So think of your line like these rectangles. Think of it, if it's a bit wider, there's a good chance that that's still in play. So it may have come back to retest. It's sitting in the retest, and it's going to go down again. If it breaks through here, I think we might have a reasonably good short as well. So yeah. Okay. Shane, hey Rob, shouldn't you move the red line? There's a red line. Dum, 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 dum. Where's the red line? Dum, 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 dum. Show me the red line, and I'll just tell me about the red line. I'm not sure what the red line. I got orange lines. I see I got orange lines. That's the price. I can't really move that. Yeah. That's resistance, that's support. And I'll make these trend lines yellow so we can see them. Line. Trend line. Thanks. You see, you had me going there, Shane. I was like, where's the red line, man? Oh, that's why I love these shows. I love you guys. It's unreal. It's good fun. Okay, so the trend line. No, I just got to get my composure back. Let me show you why we're not moving the line. Okay. There's the trend line. Shane, look at this. There's a point. There's a point. There's a point. That's 3 touches. Now, I like my trend lines to have a good 3 touches. And there's a 4th and there's a 5th. Now, why didn't I move the line? Because if I move the line, this is 1, 2. You can. There's nothing wrong with that. But then you've only really got confirmation on 2. So what I'm doing here is I'm just keeping the confirmation on 3. Okay? And that just gives me the picture that it has broken through, come back to retest, and it might just drop off. So it's just stronger analysis. That's all it is, nothing else. On the day chart, back to the H4, it looks a lot bigger on the H4, but it's a breakout, come back, retest, probably come down. I think it looks like it's probably going to be a reasonably good short like that. That's why I haven't moved the trend line. And you know, the problem is when we look at a chart like this, we look at the trend line and we see the candles breaking through. And the candles make you think you really need to move the trend line. But you must remember these spikes are the highs and lows. Highs and lows of the 4-hour or day or whatever chart you're on, or 5-minute, whatever. These are the highs and lows. Now, a lot of traders trade with the highs and lows. But you must remember, if you're trading with the highs and lows, that you're trading with spikes. Okay, so if something happens, if volatility happens, if Ben Bernanke stands up and says the economy is going to go to whatever, and you get this big spike down, and it goes back, and it carries on through the day, and you trade that spike. Now you've moved your chart line way out onto that spike. Whereas if you trade on the day, on the line chart, you're trading on closing prices. Closing prices are accurate. They tell you what the day actually brought. That's the closing prices. Spikes don't bring you accuracy. But some traders like to trade with spikes. So, you know, it's everyone to their own. I just prefer to trade with the closing prices because spikes, I know, can go out of whack at any time during the day. Just somebody says something and there's this move and it comes back, and then your chart's just not that accurate. It doesn't have to be perfect. Your chart doesn't have to be perfect, but it's good to be in a reasonable place. So that's the reason that I'm not moving this trend line. I've taken it on a line chart on the day, and that's telling me that my points are there. So even though I've got this bit of a mess here and a bit of a mess here, that's okay. What I'm understanding with this is it has broken through. It failed, came back, retest. It might break through and go. If it breaks through the next time, it's probably going to go. So that will give you the answer. Yes, we do need our positions to start moving. Goodness. It has been, like I said, last month was a tough month, and I'm hoping that this month is also not going to be a tough month. I mean, we haven't really got any good trades going, you know, and it hasn't really moved in our favor. So it could have a lot to do with the things that are happening in the world at the moment and the sentiment and all the rest of it. But you get times like this, and you have to ride them. You have to ride through them, because when the good times come, they come and they go mad. How's it, Coral? Good to see you. Good to have you. But yeah, you know what it forces you into? Times like this. When you see times like this and patience starts to wane, you know, you start to feel these positions need to move now. What the hell? This is not happening. You know, it's going against us. And eventually you end up becoming a scalper because you just can't wait any longer. And you get into scalping and then you lose everything. So that's what happens. Generally what happens. Or people end up trying 5-minute trading, or they end up trying 1-minute trading. They end up trying all these different things, scalping the markets, trying to make money, and it ends up biting you. That's the problem. You've got to be patient. The market is, it can last much longer than you can. It'll hold out much longer than you can. And being patient in the market is one of the most difficult things you can do. It's so difficult to be patient. All you got to do is tell yourself, look, I've taken this trade based on the feature of this chart, and that human beings are creatures of habit. So what happened in the past should happen in the future again. So what I'm looking at here is I'm taking the trade and I'm thinking it's going to go down. Now I've got to be patient, wait for that to happen. And then it starts turning against you, and then it makes you even more impatient. And you lose a few trades in a row, and that makes you even more impatient. That's pretty much what the market does to people. And that's why so many people fail. That's because when you get into trading, you're expecting to win immediately. Everyone expects instant success. And as I said earlier on, when I tell you that 70% of traders lose, every single person will think, well, I'll be part of the 30%. And that's a good way to think. It's positive thinking. That's the right way to think. But the unfortunate truth is that 70% of you will end up in the 70%. That's the problem. And the problem doesn't come from systems. It comes from psychology, it comes from strategy, and it comes from fear, FOMO, all those things in the market. So, yeah, and impatience. Patience is a big one. It really is a big one. So keep that in mind, guys. You know, when you're trading, keep that in mind. It's so important. And it's it's one of the reasons that my channel is probably not the most popular on the internet. It's because I preach the truth. I try and tell you guys that you ain't going to win this in a day. This isn't something you just walk into and you just start making money. It's really difficult. And to get your mind around it and to get your psychology around it is even more difficult. And you'll start looking at trades and thinking that there's a conspiracy against you, that there's someone watching you and they're trying to destroy you. And all these thoughts go through your mind sometimes. I'm sure a few of you have felt that. You can tell me here if you have. That's how it goes. You start feeling like there's a conspiracy against your trading. That the people you're trading with, the brokers watching your trades, and he's making your trades lose. You know, that sort of thing. There's so many things that go through a person's mind. It's insane. And that's what the market does to you. So the big thing with the market is staying patient, staying calm, staying level-headed, so that you can make a profit in the future, so that you can get to the other side at the end of the day. Luckily, humans are creatures of habit. You know, when you see a trade going against you, for example, I look at Brent and I say, oh, this trade was all bearish. And then I took a sell and it went against me. And I'm thinking, man. But just look at the way the chart's printed, just open it up a bit and say, well, you know, there is this and it gets there and it bounces back and comes down. You know, if I'm patient, it'll probably go in there and come back down again. It's okay. But you're going to have to sit in a loss while it does that. That's the difficult part. And you just have to understand that is a possibility. That said, it could break through, go to the upside. That's why you have a stop loss, so that you don't get wiped out. Quite simple, really. For example, this New Zealand dollar, US dollar, the patience. Where do you get the patience to sit on this trade? It's just not going anywhere. It's not doing anything. And then you get US dollar, Japanese yen decides to turn against us after it's just sitting here in undecided situations. So, yeah, not every trade works out, eh? Many of them don't. Euro CAD. Shall we have a look at Euro CAD? Well, US dollar CAD. One thing I'm worried about, I'll have a look at Euro CAD now, but I'm looking at this US dollar CAD. And if you look at the US dollar CAD, you see how it broke down. Came back up, carried on breaking down, sitting in support. My concern for CAD, Canadian dollar, is that it's going to break through the support and go down. Now, let's have a look at the Euro CAD. Let's see if I can find it here. Euro CAD. Okay. It's in the watch list as well. That way we have it there. Watch lists. So let me just see if the EuroCAD looks anything like that. Okay, so EuroCAD looks a little bit different, but I just looked at the US dollar CAD just to give a picture of what we are. So Wendy said right on all that stuff that I said just now. So I see what you're saying on the EuroCAD, waiting for that breakup. There's a lot of bottom here, hey? Yeah, look at that. Okay, let's see what we've got. Let's do a proper analysis on it and see what we've got. Just okay, let's just get a nice picture here. Is that a spike? I think what I'm gonna do, yeah, I'm gonna ignore this one down here. I'm just gonna look at these, because I think those are more relevant. Huh? I think those are definitely more relevant. Yep. I look at that. This is not a relevant point. There's a nice point. There's a nice point. There's a nice point. There's a nice point. So we've got a nice breakup. Let's have a look at the resistance at the top. See what we got here. Yeah, it doesn't look too bad, eh? You could get a breakup here. This is in a range. It's in a long range. Ooh, hectic range. You could take this level at the bottom here, all the way from down here. It's also there. I'll just draw it in just for safety's sake so that we can determine it, because it is there, eh? So let's not ignore it. Let's just put it in because it is there. If you look back, it's there, there. So there is points. So we do have to concern ourselves with this at the end of the day, but not as much as the others. So if we look at this now and we take it back to the 4 hour, right? Let's take it back to the 4 hour. Looks good on the 4 hour candle charts. Okay, so I think what we're going to do here as well, this is where you get your confluence. This is what we're looking for. Aha! Look at that, guys. This is a great trade, guys. Look at that. Hey? No, Coral, it's not going to take a few days. Look at this. It's broken up. It's come out of support here. It's breaking through this trend resistance, and it's breaking to the upside. I think we should take a long on this. Totally. I'm going to take a long for the group. Anyone who says don't do it, shout now, because I'm going to start working the trade out for us. Where shall we put the stop loss, right? So we want to risk $250 or $200, okay? We're going long, right? So we want the stop loss at 146,500, I think. Let's give it a decent stop loss. Let's give ourselves plenty of room on this trade. 146.5. Take profit. Let's say 151. Looks like a good area. 151. Okay, we can't take that big a trade because we don't have that kind of money in this account, again, do we? Let's see how many lots we can take to make this. Oops, that's too many. 0.4 is too much. It's probably 0.2. 0.25. Yeah, 0.25. 0.25 lots. We want to buy. Yes, Bobby says, do it. I'll show you a fib in any moment now, and we're going to place the order on this trade. As yes, Bobby says, do it. Okay. So we're taking a buy trade. There we go. We have a buy trade. Euro, dollar, Canadian dollar. Okay, guys, these are your trades. Enjoy. They're all losing. That's trading for you guys. That's trading. But look at that. That looks like a good trade. Come on. Got to do it. Got to do it. Well said, Bobby. Got to do it. Can we use a fib? Do you want to use a fib on this? I'm going to show you something with a fib, right? Okay, in a range, it's very difficult to play around with a fib. But yeah, okay. Good idea. Take it to a line chart. Line chart's always good. Where's my Fibonacci? There must be Fibonacci on here somewhere. Boom, 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 boom. No, I've got Fibonacci on here somewhere. Andrew's pitch, Fibonacci. There we go. Let's have a look, shall we? Why does everything have to be purple on this thing? Let's change the color to... I don't suppose it'll allow me to do that, boom. Color. Give me a different color. Like, there we go. That's better. Now I can see. Right. Look at that. So interestingly enough, Shane, we've just put the... You could wait till the candle closes, but I decided not to wait. That's me. Anyway, I'll put this, and look at that. It's in the golden zone. It's literally in the golden zone. It's bouncing off the 61. I mean, if that's not confluence for you guys, that's confluence, guys. That is such confluence. It's literally in the golden zone and bouncing to the upside. It's got to be a good trade. Guess what? If it's not, tough luck. There you go. So that's the trade, guys. And as you saw, that is in the golden zone. It's right there in the golden zone. The candle will close in 1 hour. I'm guessing it'll close in the green unless something untoward goes and happens. So, yeah, looking good. Yes, Shane, as you just saw, you can use my trending with fib. Totally. Of course. Exactly. I mean, I just drew the fib in there, and you saw that. Okay, I used the line chart, but I'm just going to draw this in here, and you see there, you're in the golden zone with it, and you know, if you draw a trend through here, you draw that trend, you can see it's all confluence. It's all confluence. You just don't want to overdo it. That's the big thing. You don't want to have fib, MACD, trend lines, support and resistance, supply and demand, fair value gaps, all on the same chart, because you're going to end up trading against yourself. So you don't want to do that. But yeah, Fibonacci, I love Fibonacci. I think it's a fantastic thing because it's something that it's part of the world. You know what I mean? Everything happens in Fibonacci sequences. So what I love Fibonacci for is exactly what I did now. Stick it in, have a look, confluence. It tells you, you know what, that trade you're looking at, because of your support line, your trend line, whatever the case, matches up to my Fibonacci. So the trade you're going to take now is going to fall into place based on these sequences as well. So you can use it in the same, context, exactly the same context. So there we go, guys. We have that trade in. And we finally got a bit of green. Okay, so if I was a scalper now, I'd probably have taken profit already, don't you think? Most likely. But very seldom that you take a trade and it goes into green immediately. That's so unusual. But yeah, most scalpers would be taking that profit already, most likely. The point here is sit on your hands and let it run, guys. Let it run. Okay, so that's a trade. That's in. That's good. Now we just need these other trades to also go in our favor. Oh, yes, Lincoln, well said. Thank you, Coral, for the great trade idea. Now, Coral, this is our trade. It's a group trade. So EuroCAD. You guys who chose the certain trades must remember who you are, okay? So I can't remember who chose what trade, where, when, and how. I'm part of the whole deal here because I decide whether we take the trade or not, if it's really bad or really good. So yeah, obviously I've got a lot to do with this as well. But like I say, at the end of the day, it's your trade, guys. Enjoy it. Let's see how we go. And we can see if we're going in the correct direction for you or not, if we're getting the right picture. But obviously, I'm not going to trade trades that are really off the cuff, really bad. I don't know who called the Brent last week, but it's gone against us. But we're not going to lay blame on anyone. I'm part of that. My choice. I took the trade with you guys, and it's gone against us a bit. But like I say, we hold on and we go. New Zealand dollar, US dollar, we took the trade together. We go with it together. We follow it together. US dollar, Japanese yen, I think might be my fault. I think I took that trade myself for you guys. And now we've got Euro CAD. Keep on going, guys. Let's keep on pushing. Let's get it going. We just have to be careful. We can't really take 10 trades here because if we lose them all, we might lose the account. So, okay. Hi, Peter. Welcome to the channel. Now, Peter, you're new to the channel, so I'm just going to explain. For all you guys who know me well, I'm just going to explain this to Peter quickly. What we're trading on here, guys, is funded trader markets. So, Peter, this is funded trader markets. The reason I opened a funded account is because a couple of the guys said to me that they would like us to have a cash account that we can trade together with and whatnot. And I just thought if I put 10,000 bucks in an account and it goes pear-shaped, then I lose 10,000 bucks. And this funded trader markets account effectively costs 100 bucks. It's $25,000 account. And if it all goes pear-shaped, I lose 100 bucks. Okay. So that's why we're trading a funded trader account. If any of you guys want a funded trader markets account, I did actually put a link in the description as well. So Peter, that's the platform is called C-Trader. It's the C-Trader account. All of my previous videos and older videos and whatnot, I was always using the Trading View. Trading View is a fantastic trading program. You do have to pay for it as well. But yeah, some companies, most brokers will give it to you. Most brokers that you take on with a cash account will give you their program. My cash account uses MetaTrader 5, for example. I don't show my cash account on here because I don't really want my account number on here, number one. And also, you know, you get the situation where one day you see this, next day you see that, and you're wondering what the hell I'm doing anyway. So we opened this account so that we can trade together as a community, and you guys get to choose the trades. I look at them. If it's really bad, we don't trade. If it's really okay, we can look at it and we can trade. And we follow the trades and we see how they go, which is why I actually kept trades over the weekend because I didn't want to close them and you guys like lose out. So, you know, we've got the trades going. There's 1 or 2 trades that I'll take on your behalf without you guys being around because we're only live Tuesdays and Thursdays. If I see a good trade, I'll take it, and then it'll go against us and it'll be my fault. But okay. Shane, you're guilty for the Brent. That's cool, dude. That's cool. Maybe it'll still win, eh? Maybe we'll still win. Maybe we'll still come out on the other side of Brent and go, Shane, you're guilty for the Brent. We made a fortune. Maybe it'll still drop to 70. That'll be great. But welcome to our community, Peter. I do hope you're going to enjoy it here. We have a lot of fun together. We're a small community. And the reason we're a small community is because I tell traders that you're not going to make money in a day. You're not going to make $1 million in a day. And I don't only show you wins, I show you losses. And I explain to you that the market is not about squiggly lines. It's about strategy. And it takes time to learn the markets. You don't become a trader in an hour overnight, or there's no Lamborghinis parked in the driveway. It doesn't work like that. I've been doing this for 30 years. It's a tough game, but it's fun. I enjoy it. It's something I like doing. And just like, for example, these YouTube videos, I started making YouTube videos because I got tired of all the noise that I saw, people boasting about making millions and that. And then I started enjoying it so much that I do it like this now. So I really love making YouTube videos as well. So I love trading. I enjoy the stuff, and that's why I'm here. But yeah, Peter, it's C-Trader. You get it with the funded trader markets, and it's actually a nice program. It's not bad, actually. I must say, when I took this account this year for the team, I was actually quite surprised at how nice this C-Trader is. I do have another account with these guys as well, which is also on TradingView. They use TradingView, but it's not as nice as this. This is actually nicer. And then, of course, I've got my personal cash accounts, which are on MetaTrader 5. The cash accounts are quite important to me. Those ones are what do it for me. And also, disclaimer, most of my money is made on my investments, not on my trading. The trading is more for fun. Most of my money is made on investments, okay? I invest in shares. I set and forget. I don't look at them again. They just grow over time. And every month, I just put more money into those shares. And they just become worth more and more and more and more all the time. If you do that, I guarantee you in 20 years, you're going to look back and say, damn, that guy gave me good advice. So that's what shares do, okay? No matter what you do, you just keep investing, set and forget. I do keep one eye every once a month, maybe twice a month. I actually check my portfolio and just make sure that none of those companies are going to the doldrums. You know, there's one word that scares me a lot in a company. And it happened to me once before. I did tell a story in one of my last videos about the company I was invested in, and I heard the word fraud, and I was out of there. That could have cost me just about everything if I'd stayed in there. I had a fortune in that company, and luckily I'd made a fortune in that company, and that was my fortune because I just kept adding. I just put more in. It was the darling of the market. I just kept adding to it, and when I heard the word fraud, I just sold everything, and a week later that thing crashed so bad. It must have been the luckiest time of my life, to be honest with you. The luckiest time. I would have lost so much money. I'm not even going to mention numbers. So, you know, you do have to keep one eye on your portfolio, just in case. But that said, you can normally you can see when companies are going a bit off the rails, and you can sell everything up in that company and then move it into another. Don't sit on the cash. Take that and move it straight into another good investment and leave it there so they can grow and just forget about it. But like I say, all my investments are set and forget, and they grow. And some of them are dividend-paying shares, some of them are growth shares. And either way, you make money. It's great. ES is basically US 500, dude. So I don't have my other platform up here at the moment with ES on it, but it's basically the same as US 500 with a slightly different price. I think yours will be 61 or something like that, but it's going to look very similar to this. Now, I'm very bullish on the US 500 as we stand overall. I think that the US 500 itself, the ES will be a little bit higher, but the US 500 should at least go through 6,600 this year, maybe even head to the 7,000. My call is 6,600. I think it'll go there. What I'm waiting for on the US 500, and it'll probably be the same on the ES, as I say, I don't have my other platform up at the moment, but it'll go through this support. It's through this resistance, break to the upside and go. If it breaks through this resistance, we've got to buy. On the flip side, if it breaks through this trend, this little trend support here, then we've got to worry because it could continue down to these main support areas down here, and we could get a correction down to 5,500. You know, I was expecting a bit of a correction in the past. Didn't happen. So I'm still very, very bullish on the markets. I think the indexes are going to go to the long side. I think the US 500 is going to go to the long side. But at the moment, what we've got on the US 500 is trading in a range. It's sitting here. It's been very bullish, and then it's just got stuck in this range. ES 500 is exactly the same. It's not going to be much different. So you can expect that all my trades on the ES 500, US 500 or ES would be to the long side at the moment. I wouldn't be bearish at all. There's no counter trade on here. There's no downside trade, anything like that. And the trouble with ES or US 500 at the moment is things are so bullish that somebody just has to say something and it'll go crashing down or crashing up. So just watch yourself on those. But yeah, that's ES. Sorry, ES, Bobby, but I don't think this platform doesn't have ES on it, okay? So, and I normally check it for you on the other platform. So I'm not going to load it up now. We're just US 500, pretty much the same thing. Okay. since we're spilling the beans, I'm responsible for New Zealand. Wendy, New Zealand dollar, US dollar, yeah. But it's okay, Wendy. You're $28.66 down. And Brent is $121 down. So, okay, Brent is basically 50% towards its stop loss. And New Zealand dollar, US dollar is basically, is that 15%? I don't know, but it's long way to go. Long way to go. We're in a good place. Okay. You don't have to see green all the time. You just have to be patient. And Brent could turn out to be the winning trade of all of them. You don't know. It can turn around here and make you a fortune. That's the trick of trading. You just got to look at it in a different light. Don't stress about this. Just watch carefully and let it go. The other trade I let go that I took, was it a Japanese? What was the other one on the history? The $90 that we lost here. $90. Great British Pound, Japanese yen. I took that, and it went against us. It just looked terrible. It just didn't look like a good trade. It's this one. Just looked bad. So we got out of it, and we walked away. And sometimes that's just what you got to do. Okay. But this looks like a nice trade, this EuroCAD. Well done. Well done. Yes, Henry, Brent. Okay, so Brent, the reason we're not buying Brent now, Henry, is because we sold it. That was Shane's trade. Guilty for the Brent. Okay, but we haven't stopped out on it, Henry. So we are still on a sell with Brent. But the reason I'm holding this sell is because my end validation is at 78.50. And you'll see, Henry, I've put in a strong resistance area here. You see how strong the resistance area is here. Okay, that's quite a potent area here of resistance, and it's so close to that resistance that I've got to say, guys, let's not just jump ship here. It could go into that resistance and just drop off the cliff. So I don't want to go long either, because if you go long here, you're going into that resistance. So we are in a sell. That's why we haven't gone long. And that's the main reason, Henry. And believe me, Henry, if we weren't in a trade, I would have been looking at a long at this point down here at 76 already. We could have swung it around. We could have swung the trade, but I decided to keep the trade based on, that's we're working on a long period. We're working over the long term. We're working on a swing trade. Hey, Daniel, welcome. Good to see you again. Good to see you back. Good to have you on board. Right, so this thing keeps coming up here. Okay. Now, that's why we're not going long on Brent. At least we know why. Yeah, no, that's insane. But these being patient, the swing trading turns a lot of traders into scalpers because they become impatient and they want to make money quickly, and they want to see the profits quickly, and so on and so on and so on. And it can be quite a tricky thing because, like I say, my personal experiences, I'll take 8 trades, work so hard on winning them, and then that 9th trade just takes out all those wins, and that's what it does to scalpers. Where Brent, cup and handle. Boom, 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 boom. You never know. You could have a cup and handle. Patterns can be quite important in the markets. So it can be quite important to keep your eyes open for patterns, and yeah, cup and handle could occur. Yeah, totally. That could be it. Donald making the oil go up and down. Yeah, Daniel, that's why I'm just staying in it, and I'm just watching, and We shall see what happens. I'm not going to jump ship just yet. We'll hold on and just see if it goes into this resistance and then comes back down again. And then maybe it'll be a good trade. You know, let's just see. Let's not be impatient. Let's keep an eye on it. Alrighty. I guess my leak's fixed because it looks like my plumbers are leaving. So they can all sort that out and pay their accounts and whatnot. It's good that you're seeing things, Shane, because, you know, when you see things in the market, it means you're picking up the patterns. Just remember that the charts and the squiggly lines and all that and the patterns and all that, it's high probability trades. That's not what makes you the money, eh? Just remember the strategy makes you the money. So at the end of the day, even if you make a mistake when you take a trade, and there's all likelihood that you will, because I do, because you draw a line in and you see that, and you think, that's the perfect trade. I got to take that trade. Look at that line. You got to take that trade. That's perfect. And you take the trade because you don't want to hesitate. You shouldn't. And you take the trade. And, you know, hours later, you come back and look at it and you think, you know, shouldn't have done that. That I made a mistake. But even if you make a mistake, the market's 50-50. And, you know, you got a chance of it going up. You got a chance of it going down. It really doesn't matter. Just put your strategy in place and follow your strategy to the T. And if you follow your strategy and your psychology is right, you get over your FOMO, you get over your fear, then you'll start to make money somewhere down the line and it'll work out for you. Look at this. I'm taking these trades based on your calls at the end of the day, most of them. And it's no problem. It doesn't matter. We're going to see how this is going to turn out. I'm just taking trades based on other people's calls and looking at them and saying, okay, that looks good, we'll take that trade. And we're going to see it's all about the strategy. And at the end of the day, because everybody looks at the system in a slightly different way, everybody draws a line in a slightly different place. How can everyone draw this line in exactly the same place? You've got to be a perfectionist. And then you're going to end up with different variances in the market. As I said to you, the market's subjective. It's all about how you feel. It's all about that gut feel at the end of the day. Yeah, cup and handle. I need a nice picture of a cup and handle. If I can find one for you. Let me see if I can find a nice picture of a cup and handle for you. Now let me go in over here. Let's see if I can find you a cup and handle picture so I can explain it nicely to you, because it's difficult to show you on a chart. Here's the cup and handle pattern. Right, let's just see if we can get you a nice cup and handle pattern. It's always difficult to get you a nice sort of picture. I want to try and put it up here so that you guys can see it. And then you can actually, this looks like a nice picture. Let me see, will that bullish continuation pattern, there we go. I can give you I just want to see what's going to come up here. Come on, give me a picture, man. I just want the picture. Yeah, this is on a website, but okay, I'm going to give it to you now. I can show you how it looks just out of interest. All right, it's by some company called Intraday Screener. I don't have anything to do with them. I'm just going to show you. Hopefully I can show you quickly what it looks like. Where are we here? Okay. Boom, 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 boom. Okay, looks like there you go. All right, so there's your cup and handle. Okay. Right. Cup and handle. Okay, it's for Lincoln. Right. Bullish continuation pattern. There's your resistance line. This is the kind of pattern you're looking for, Lincoln. you know, you don't have to play into these patterns all of the time. And if you want to study patterns, you can download lots of things on the internet about the different patterns, head and shoulders, cup and handle, ascending triangles, all of them, okay? And effectively, the cup and handle is basically this shape, gives you an upper resistance. You get this cup, this sort of the swing at the bottom here. It can go the other way as well, just by the way. So it works both ways, short and long, okay? So you get this cup, and then you get the handle, which grows around the side. So in other words, you know how you get maybe you understand the head and shoulders. You get the shoulder, the head, the shoulder. Here you get the cup, the handle, and then it's on a resistance, and then you get the breakout. And the breakout is off the handle to the upside. So that's effectively what it looks like. It looks like that. You can always come back to this video and just take a screenshot of that, or you can go to this, looks like it's called intraday screener or something like that. You can get that picture. I just got this picture off the internet for you, so you can see a nice clear picture of what a clear cup and handle looks like. Because if I try and show you on the chart, it's a bit off. And that's another thing I got to tell you guys. If you look at charts in general, they never look as pretty as what the guys teach you. Would you agree with that? You know, when I show you a cup and handle on a picture like that, and then we go to the real chart, I mean, it's so difficult to see it. But yeah, this is an upside down, all right? There you'll be a cup, and then you'll be a handle, and then down, okay? So it's really difficult to see it in real life because the pictures are always perfect, and that will show you the perfect structure in the pictures. But just so that you get an idea of what it looks like. Okay. Now, what's this error? You know, hopefully everything is still working. But yeah, showing me a couple of nasty things on the side there that don't seem to want to go away. Buffering seems to be a thing at the moment. But okay, hopefully you got that, and hopefully that all went according to plan. Now, right. Do you like your system strategy? G'day, Rob from Greg in Brisbane. How's it, Greg? Welcome back. Good to see you again. Guys, can you please help Rob a little and press the like button for the YouTube algorithm? Thanks. Yes, that's Bobby. Thanks. Great. That's good. That's good. I gotta say, I must have the least viewers on YouTube, especially on the live shows, eh? But I'm doing it for you guys, so it's cool. I don't mind. I really don't mind. Half time. I'm new to trading. Is there any point trading before the market is opened? The thing is, if halftime, if you new to trading, is saying, is there any point in trading before the market has opened? Now, what you have to understand is that if the market hasn't opened, then there's going to be not much movement in certain products, okay? But with swing trading, what you're looking for is that overall big picture. So we're trading on 4-hour charts. You might be trading on day charts. You might be position trading, or whatever the case. And it's effectively a situation of, if you're 5-minute trading or you 1-minute trading, then you might like to worry about what time the market's open, what time the markets close, because you're trading on that opening, you're trading on that closing, and that sort of thing. But if you're swing trading, or if you're position trading, or if you're day trading, it doesn't matter, because you're looking at a more or a bigger a sample size of people or traders. So you know, I always use the analogy. For example, if you're checking out a system and you put 5 traders in the room and you test that system, and you get a result where 3 traders did well and 2 traders lost, and you go and open $1 billion company because of that, then that's a really bad sample size. Wouldn't you say that you would like to have 100 traders in the room and get a better sample size to get a better result? So if you're trading on 4-hour or day trades, you're getting a better sample size. So you don't really need to worry about trading before the market's opened, after the market's open, during the market, whatever the case. You're just looking at the overall picture following those hours. But if you're trading on very small amounts of information, then you might want to worry about whether the market's open or not, because that will make a difference to your trading. Peter, thank you. Hi. Do you draw all your trend lines on different time frames from the line chart? Frank, what I normally do when we talk about trend lines, and I'll prefer to draw my, as you've seen, I'll prefer to draw my levels, whether they're trend lines or support and resistance or supply, it doesn't matter. I prefer to draw my levels off a line chart, number one, and off the day chart, number two. But then I'll drop to the 4 hour, and then I'll draw short-term lines in. For example, I look at this here, and I say to myself, ooh, you know, I just want to quickly have a look here. Has this broken through? Oh, no, it hasn't. It's perfectly okay. You see, and I didn't even take it to the line chart or anything. I just wanted to quickly see. But if I want a little bit more accurate information, then I might take it to the line chart and say, maybe I want to see it on a line chart and see if it's a little bit more accurate. But I'll draw it on the time frame I'm on. But as you know, I prefer to take my accurate levels from the higher time frames, from the day charts and that sort of thing. So that, yeah, I do draw the lines on all. Good morning. Thank you. And no worries if I learned anything from trading, that there isn't one thing you can 100% rely on. That's absolutely true. Hey, Rob, I just joined the live. Did I hear you say something about being in the hospital? I meant to ask earlier. Yeah, Wendy, I went in last Thursday, and unfortunately, I have an unfortunate genetic glaucoma disease, which means the eyes, which means I could get severely affected, but there's a simple fix, which they're going to do this month on the 26th, and it's a laser. They're going to make a hole so that, or make they got to make it wider or something so that the eyes can release. It's probably something to do with training more than anything else, but it's seemingly a rare genetic disease that I've got that has to be sorted out, and it will be sorted out. And it's these. Luckily, we live in these wonderful technological times where they can simply go boom and sort you out in a matter of minutes, not even days. So yeah, it's no big deal. It's just annoying, and you know, you think to yourself, why me? But you know, that's life. You just take it and accept it. And we live in such a fantastic time where they have the most amazing equipment. They can just go boom and sort you out. It's incredible. But yeah, I was there last Thursday, and they were like digging around in the eyes and whatnot just to make sure and get the measurements right and everything. And now I have to go back, and they just have to do the laser thing for me, and I'll be sorted. So yeah, okay. And thanks for asking for the hit and like. Spreads at Sydney Open are insane, up 30 pips. I agree, Gary. Also in the Sydney using IG. I'm in Melbourne and use Blackpool markets from New Zealand. Okay, I love Blackpool. Yep, Blackpool. People like Blackpool mostly for the oil trades, I think. They offer leverage of 500 to 1. I use them myself also. Just remember, the more leverage you got, the more tricky your trades. Great for small account growth. They've been great to me as well. Okay, fantastic. Right. I see that. Yeah, growing a small account with leverage, just remember your risk, eh? Just manage your trades, just do your strategy and you'll be okay. But you can grow a small account pretty quickly if you take the right amount of risk. Dum 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 dum. Shane, I see you say, do you follow the Scruffy Trader? I'll be honest with you, I don't follow anyone. The only trader that I would I say look up to or agree with or enjoy is Tom Hugot. I don't mean to mention names, but then he's got it down to a T. But he's a high stakes trader, trades on very low time frames, and most people can't do that. And that's the difficulty of it. It's something he's really, really good at. But what you can get from him is a lot of the psychological stuff, a lot of the, you know, how your mind thinks and stuff like that. So he's quite good with that stuff. But no, I don't watch most of the other guys. What I will do on YouTube particularly is just I have a look at what the other guys are doing, just to see what's good, what people want to hear, what people are interested in, particularly in comments and things like that. But no, I don't follow those guys. Like I say, there really is only the one guy that I would be interested in having any information from, and he'll outtrade me every time, most likely. Yeah, thanks, Wendy. Yeah. I also don't really know him. He said don't know Scruffy. I also don't. I don't really know him. No, sorry. Okay. But yeah, no, great. But that's just my 10 cents worth on that. I don't follow other traders much because I have my own system that I've learned over the years, over the last 30 years, and I'd go with that. I don't want to confuse myself too much by watching too many other people or anything like that. But there are one or two people that have inspired me in my life, and they were interesting. But they were very much price action traders as well, and very much psychological traders, people that work on psychology and that sort of thing. I understand a lot about trading because of people like that, people that know more about the world than squiggly lines. There's a lot of traders out there that and I respect all of them because they've all got something to offer. Every single last one of them have got something to offer. So, you get all these guys that always talk down about all the other traders and they're all bad and all the rest of it, but they're not. They've all got something to offer. You can learn something from everyone, whether it be that particular scruffy guy or Tom or whatever. But somewhere in there, there'll be some information that you might be able to use. What you do have to be careful of, though, is taking too much information on board. In other words, information overload. In other words, too many different systems, too many different ideas, and you get swayed from one to the other, and you end up, getting confused. What I do find many of the other guys do, which I don't agree with, is just show you all the wins and how great trading is and how brilliant they are and whatnot, when in fact they're not really showing you the bad side of trading. So that's probably why my channel's not as popular as most, is because I show you the bad side of trading as well as the good side. That's important for you guys to understand and for you guys to know up front that there is a difficult side to trading and a bad side as well, not just a good side. It's not just wins. It isn't just wins all the time. You don't just win every trade. Okay. Yeah. So that's my take on do I know the other traders. Perhaps I should, perhaps we should know them and be more interested and what have you, but there's not a lot they can teach me because they've got their own ideas, their own ways of trading. If I was new to trading, I might watch all of these guys or be interested in what they've got to offer, but I don't need that. Thanks, Gary. I'm glad you like the commentary. Rob, you're given profound information about trading. 90% of the people on YouTube don't. Yeah, well, that's, and once again, not to talk bad about anyone or any of the other traders, but I must say that a large percentage of them really only want to sell you a course of some sort. And I don't have a course to sell you. I do have the members area, of course, and I've got some affiliate stuff, to support the channel and what have you. But yeah, no, I understand what they're about. It's their business, and their business is selling courses or whatever the case. That's not my business. So my core business is trading, and yeah, I enjoy the YouTube videos and the education I give you is why shouldn't I impart the information to you at the end of the day? You might as well know what's going on. You might as well understand it. And that's why I made the first videos in the first place, was because I just felt like nobody was telling you. Nobody was giving you this information. Everybody was somehow hiding it under the chair and just telling you that you can get into trading and make loads of money. And, you know, one thing I've learned in my life is no matter what trade you get into, no, I'm not talking trade, I mean, no matter what job you get into, what kind of line of work you get into, from the outside, it looks great. It looks impressive. And you see the guys going to work and you think, man, if I had that job, that's where I would want to be. And yes, in the old days, they had a saying, walk in my shoes for a day and see what that's like. Because that's the point. Once you get there, then you find out that it's not as easy as they made it out to be. So it seems to be a natural thing with human beings and human psychology to make out that you've got the best job in the world, that you've got the greatest way of living in the world, and you're the best in the world, until you see the realities, and then the realities strike home and you go, oh, I didn't want to go there. You know, I was actually better off where I was. That's the reality of the world. So I realized that at a very young age as well. No matter what you do, it's not going to be easy if you don't work at it. You got to work really, really hard at it to make it work. So the unfortunate thing about trading is it looks easy from the outside. And there's a lot of people out there that will say to you, get into trading and you'll make millions. It's so this, and you'll just drive Lamborghinis and whatnot, and you'll see that flash. And they're not telling you the bad side of it. And you get in, dump everything, get in, and think you won't even have to work at it. And then you find out that it's really difficult. It's really hard work. And the problem is, it's because people teach you the high probability systems. There's a lot of systems out there. It's not just price action. There's so many different kinds of systems that you can trade with. And you get in and you start trading with those so many different kinds of systems, and you think that those systems are going to make you the money. You think that the market is fractal. You think that it's mathematics, and you think that you're going to make money out of these lines. And that's where the market fools you. It's not about lines. It's not about maths. It's not about this type of stuff. It's about strategy, and it's about people, and it's about psychology. I can teach lines. I can teach this price action system to a primary school kid, and he'll learn it, and he'll know it, but he won't be able to apply it. That's the difficulty. Human beings can't apply it because it's real money, and it's difficult. And also, losing, nobody wants to lose. Everybody's a winner. That's what gets to you at the end of the day. Whether it's big money, small money, it doesn't matter. If you're losing, you feel it. You'll always feel it if you're losing. It's like if you get into a game of pool or snooker or football or tennis or whatever, or squash, golf. Golf's a big one. And you start losing, even if you're not playing for money, you're just playing for fun with your friends, but you're losing. Nobody wants to lose. It's a horrible feeling to lose. It's the psychology. All in your head. We don't get Oldsmobile here. But yeah, like a car. Totally agree. I don't want to go into cars. I grew up with cars, and believe me when I tell you guys this, okay? I'm not boasting. I'm not talking big or anything like that. But it was an interesting thing that I did the other day. It was an exercise on how many cars I'd had since I was 18 years old. And I couldn't believe it. I counted the cars, okay, that I'd had since I was 18 years old. And I had over 58 cars. It was insane. Insane. I hadn't counted the bikes, just the cars. That's an insane amount of cars that have gone through my fingers over time. Oh, goodness me. Yeah. Yeah, classics are always good. I love the classics. Absolutely love the classics. Totally. Brilliant. Brilliant. Let's close that off there. But yeah, like I say, most people not interested in hearing what I've got to say about the truth, and I'll keep on putting the message out so that people hear it, because somewhere down the line, they'll hear it. Look, that said, we do have a lot of subscribers on the channel. In case you didn't notice, there's 9,500 people that are interested. So I don't know why we've got so few people on the live show, but there are a lot of people interested in the videos. There are a lot of people that watch the videos. A lot of the videos get over 1,000 views. So yeah, there's people that are interested. It's just a question of, the reality of it. And maybe they get attracted to the guys telling them that they're going to make a lot of money. That's how it goes. It's a bit like, why drive, people don't want to drive the classic car. They want to drive the fancy car. They want to make it all in a minute. Instant gratification is a big problem in today's society. When we grew up, we learned that things had to be worked hard for, and it took time and all the rest of it. And it's not I don't agree that you have to work hard for everything, but unfortunately you do. And it would be great if everything fell in my lap. I'd be the happiest man on earth. Yeah, is everything in your lap? Oh, great, thanks. I'd love that, but that doesn't happen. Every time you do something, you have to work harder. It takes time, consistency, hard work. You push at it, you keep on going, and those businesses grow. I've opened a couple of retail stores in my life just because I don't even know why I did it, but because I always wanted to have a shop. When I was a kid, I always used to play shop while everybody else was playing. I used to play shop. I used to love playing shop. So, of course, I opened a few shops in my time. Those shops take at least a year to become profitable. Every time. They don't, everybody thinks they're going to open a shop. People are going to flock in. They're going to make money overnight. Doesn't happen, guys. It really doesn't happen. It takes time for these things to become profitable, start making your money back. They're never easy. Never easy. Right, so now for the big one. Yes, Gary, trading the longer time frames does reduce the white noise. It also gives you a bigger sample size, and it also allows you to take a trade, walk away, and leave it. You don't have to sit and watch it. If you want to, you can, but I don't. I don't sit and watch the trades. I keep an eye on them. I flick back and check what's happening, but to sit and watch charts all day, that's not for me. Imagine if I was doing 5-minute trading, and this is something I struggle with as well, because I've realized that if I was doing 5-minute trading, I wouldn't be able to make these videos for you guys. I wouldn't be able to sit here and make these videos because I'd be watching my charts 100% of the time if I was 5-minute trading. I know some of the traders, what they do is they trade an hour and then they go away and they leave it. Okay, that's also something people do, so that maybe works for them. Like I say, I don't know how the guys find the time. The guys that do the 5-minute trading, I really don't. I much prefer just doing the swing trading, position trading, as I always called it. Put my position in, wait and see what happens. Goes my way, great. Doesn't go my way, I live with it. Take the loss. That's how it goes. And you can do your own thing. You can go and sit on the beach if you want to. You can make videos if you want to. You can do whatever you like. You can go shopping. Doesn't matter. You don't have to sit and glare at the screens all day. And you've got a mobile phone. And this is what people forget. You've got a mobile phone. If you're down at the beach, you're a little bit worried about that trade you took this morning on the Euro Canadian dollar that I think it was Gary's trade, I don't know. And you think, I wonder how that's going. You can just go on your mobile phone and just go and check the trade out. See how it's going, if it's crashing or if it's going okay. And if it's going bad, you can just trade out of it on your mobile phone wherever you are. I don't recommend doing that, though, because you'll find yourself doing that. You'll find yourself checking a trade when you're out of the system and making the mistake of getting out of a trade when you shouldn't be getting out of a trade. Just remember, the market's 50-50. Win rates are meaningless. Always meaningless. So, guys, I'm going to head on my way. And we're going to have a live show on Thursday again, of course. And I see Lincoln's also got to go and drive the Oldsmobile. So I'm out of here. I'm going to head off. And I'm going to see you guys on Thursday again for the live show, 2:30 GMT +2. It's a bit later in the day because of the American session. And there will be a video coming out tomorrow for you guys, which discusses the fair value gap. Just remember, I don't trade with fair value gaps, but I thought you guys want to know the difference between fair value gaps and normal gaps and how to trade with a fair value gap. So I've put that out for you guys. And then I'll bring you another video on Friday again after the live show on Thursday. Don't forget, the members get the morning trade of the day every day. I'm thinking of bringing out a trade of the week as well for you guys. You can have a look at what you can trade on a weekly basis if you really want to trade slow. But I'll look at that and see how we go. Because I do that for myself. I look at the week and I say, let's see. So guys, thanks for watching. And we'll see you back soon. And have a wonderful trading day.